Hello and welcome to the Banker Awards 2010 at the Intercontinental Hotel in London. My name is Geraldine Lamb. I'm the Capital Markets and Investment Banking Editor at The Banker, and I'm here with Brian Kaplan, Editor of The Banker. So Brian, how many banks do we have represented here tonight?
Well, we've had a fantastic year in the awards this year, and we're given awards in 149 different countries, which is more than ever before. And we've got 123 represented here in London, which is fantastic because we've had very snowy weather and early winter, and people have braved the conditions and managed to get here from all over the world: China, Brazil, Russia, India, everywhere. And we had a fantastic quality of entry this year, which was even more pleasing. And it took the judges almost a week of reviewing the entries to come up with the final verdict. Because the quality was so good, and there's lots of places where 3 or 4 banks stood out as having improved their figures and taken big initiatives in terms of marketing and product development and technology. So it's been a fantastic year for the awards.
So we're here in the midst of a sovereign crisis as well as the harsh, snowy winter. What do you think we've got in store for us in 2011, judging from what we've been going through recently?
Well, there's no question about it. In Europe and the States particularly, the recovery is very slow, and we're still hitting bumps on the road. I think the outcome of the sovereign crisis in Europe over the euro will be that the euro will be protected at any cost, and it'll result perhaps in more consolidation in Europe. In fact, we'll probably have more of a federal Europe than we were expecting at this juncture. But I think the commitment is there to keep the Eurozone in place. And that's good news for the rest of the world, because it's such a large part of the world economy that it would impact on other countries if it got into serious trouble. But then in other parts of the world, of course, the news is pretty positive. So in Asia, the countries have low debt levels. We're getting a shift in emphasis from investment to consumer demand, particularly in China. There's a lot of trade going on now between what were the emerging markets in terms of China trading with Brazil, Brazil trading with India. So I think it's pretty positive. We just need to see now perhaps a proper plan in the US for lowering their deficit and getting their debt under control.
And what do you think in terms of the capital levels at many of the banks? I mean, do you think that banks now have enough capital to withstand anything that may be coming up in the next year?
Yes, indeed. I mean, the Basel III proposals, are taking capital levels up, quite a lot, and they've allowed them to make the changes over a long period of time. And there's still some wrestling going on about liquidity and some other kinds of side issues. There's a lot of regulation coming at us from all kinds of directions. We're having regulation over proprietary trading, over derivatives. They're going to be traded on exchanges. There's probably going to be regulations over salaries and so forth. So I think the banks are a little bit confused at the kind of barrage of regulation that they're facing. But I think there is a dialogue going, and where the proposals have been just too difficult to implement, or they look likely to slow down economic growth, I think the regulators have been responsive.
Well, thank you very much for that, Brian. And for more coverage on all of the issues around global banks, please do go to thebanker.com, or indeed look at the magazine. And meanwhile, enjoy the rest of our coverage of this event.
The regional bank for Western Europe is Intesa Sanpaolo. Regional Bank of the Year for the whole of Africa is Standard Bank.
Well, I think Standard Bank, there's obviously success in the African market. This is where we're from. Our whole strategy is about Africa, and that's what we're focused on. So, I think we just have to be successful in Africa, and I think that's why we've doing well there.
Okay. Could you tell us a bit more about your plans for the future in Africa?
Well, our plans for the future is obviously to grow. We're growing quite aggressively, spending quite a lot in Africa. We're rolling out branches. We're spending on our people. And yeah, the plan is just to get bigger and better in Africa.
And what do you think the challenges you'll be facing in the next year?
Well, I think, one of the biggest challenges is suddenly Africa is the flavor of the month, and we're seeing lots of competitors coming in, and that's going to make the world more competitive, and that will be a challenge for us.
And next, the regional bank of the year for the Middle East is the National Bank of Kuwait. Regional Bank of the Year for Central and Eastern Europe is the Erste Group.
I think the main reason for our success is that we have a very solid business model. We have this business model since 200 years. We are taking in saving accounts and we are granting loans. And this is working since 200 years. And at the heart of our strategy, we are really responsible for taking care of our clients. And we did this in the last 2 years as we have it done via the last 200 years. And I think that's one of the major success factors we had.
And obviously at the moment it's uncertain times in the Eurozone with some of the questions around sovereign debt. What sort of impact do you think that's likely to have in the Central and Eastern Europe region in the coming year?
I think it's a totally different story in the region we are working in Central and Eastern part of Europe. We are there doing real business with real people, and we are not invested in toxic assets because our money is invested in our clients.
And do you think that in terms of the economies in that region, there'll be opportunities for new lending and the portfolio of the bank should remain healthy in the coming year?
We are sure about that. Being in Central and Eastern Europe is extremely exciting for a retail bank because on the one hand, 95% of our clients are living in countries which are part of the European Union. So you have the legal security of the European Union. And on the other hand, you have a lot of room for improvement because, just to give you a kind of feeling, only 1 of 2 Romanians have a current account. So that's a part of our growth engine.
Are there any particular countries where you operate that you see the best opportunities in the coming year? Or is it
I think the best opportunities are still in the Czech Republic, Austria, and also Slovakia.
And the regional bank of the year in the Americas is Santander. Next, the overall award for cash management goes to Deutsche Bank.
Well, first, we're delighted to have won. This is a fantastic honor, and I'm pleased to be here on behalf of my team to accept the award. And that's the essence of our success. It's the strength of our global team and the strength of our client relationships. Without the teams on the ground around the world and without our clients, we wouldn't be here today. Our focus is on innovation to drive our client success, and in 2011, we're looking to continue that success, developing products and solutions to drive customer success around revenue generation, cost reduction, and risk mitigation. Specifically, what we're doing is continuing our theme of innovation around capabilities, currencies, and markets to enable our clients to be successful globally.
The overall award for securities services goes to Citi.
In terms of our success, I think there have been 2 main factors. 1, our globality, and 2, our broad product range. And in terms of our globality, few firms have the geographic reach of Citi. We're able to develop solutions and execute on solutions for our clients across the world in the way really almost no one else is. That's true for asset managers and broker-dealers who are looking to expand internationally. But increasingly, it's also true for emerging market firms that are looking to transact in the OECD world. And that's a very new phenomenon, and one that Citi is very well placed to tap. So, for example, Latin American managers or Asian managers that are looking to establish funds in Europe. That's a growth area, and we see that as a particular area of expertise for Citi. I also mentioned our broad product range, and indeed, in our securities services franchise, and indeed Citi, as part of our business as part of a universal bank at Citi, we're able to create solutions for our clients that few others can. For example, we've developed a solution called Execution to Custody, where we blend equity execution with custody. Very few firms are able to combine the universal bank elements with the benefits of a securities services franchise, and I attribute a lot of that blending for our success. Actually, very much more of the same. I think these international flows will continue. I think globality will continue to be important. I think a broad product shelf will continue to be important. Obviously, the economy remains uncertain, and exactly where things end up and how markets perform is an open question. But clearly, because of our broad product range, because of our globality, where shifts are to occur, we're there ready to catch them.
The first award is for financial inclusion, and it goes to the State Bank of India.
Vaishnesh Kumar is the regional head and CEO for the UK of State Bank of India, which is our winner for the Financial Inclusion Award. This is our second award, second Financial Inclusion Award. And financial exclusion is a big topic all over the world, particularly in India, which has a large population that is out of the banking network. Mr. Kumar, which is the project of the many that the bank has undertaken that you think has the wider potential for growth in the country?
State Bank of India, we have been using all the channels, what we call brick and mortar, which are the branches. We have expanded our reach by opening new branches in last 2-3 years in rural and semi-urban areas in a big way. But at the same time, we are using all the alternate channels, be it kiosk banking, internet banking, and mobile banking. And what I see, or what our bank sees, there is a lot of potential for mobile banking, because the penetration of mobile banking is very huge in India, and that channel can be very effectively used for reaching out the poor people.
So technology clearly plays a big role in trying to include a lot of people on low income that live in rural areas. Another product that has attracted a lot of criticism lately, but that also tends to be associated with financial inclusion, is microfinance, which of course a lot of the bank around the world are still involved in. What is your view on the pros and cons of using microfinance, and what do you think banks should do to try and contain the many issues that this product and the aggressive development of this product has caused?
As far as the State Bank of India is concerned, we have been very active in microfinance. And my take on this is that one is that there has to be a reasonable rate of interest, because we cannot charge very high rate of interest. But there are issues in regard to recovery, and anyone who borrows, so they have to understand they have to pay the money back. If they don't pay the money back, and if there are huge non-performing loans in the system, automatically then the cost of lending and cost of borrowing goes up. So we have to develop a culture where borrower knows that he has to pay back the money. At the same time, we have to have a culture on the lender side that we don't charge a very high rate of interest. So we have to strike a balance. But microfinance per se, we need it in India, and it is an important ingredient in overall development of the country's poor and the country's economy.
And you are based in the UK, of course. What are the issues in the UK about financial exclusion, and what can State Bank of India, what role can it play in this country, to help with their financial inclusion program?
As far as UK is concerned, of course, we have a limited reach because my number of branches which we have is 7. But still, I think by using the technology and providing alternate channels like internet banking and mobile banking, we can even here play a greater role. And going forward, State Bank has plans for retail expansion in UK, and we will try to replicate our model from India in UK if required.
We are on to the last award, the big one. The Global Bank of the Year Award 2010 goes to Standard Chartered Bank.
Well, let me start by saying it's a delight to win these awards, and particularly the Bank of the Year Award. It's a great honour. I think it's a reflection of the fact that our strategy has worked. It's the professionalism and commitment of all the staff of the bank, and frankly also the trust and support our clients and customers have given us.
And how do you think that 2011 is going to shape up for you? Obviously, you're in markets that are growing quite well, but at the same time, we still have problems in the Eurozone and in the States. We're seeing very sluggish growth there. Do you think that that will not impact on your markets, or what's your view on that?
Well, amid all the sort of doom and gloom in the papers, I think we mustn't lose sight of the fact that the world economy is growing, is recovering, but it is a very uneven recovery, as you say. Our markets in Asia, Africa, and the Middle East are actually doing pretty well. The West, Europe, America are still going through some quite difficult challenges in terms of deleveraging. And decoupling doesn't really work. Although Asia is growing more strongly, it is not unaffected by what's going on in the West. I think we'll have quite a complicated year in 2011. We're anticipating that we will see continued economic growth, but we will also see bumps along the way as we work through the deleveraging in the West and try to make some progress on rectifying some of the macroeconomic imbalances.
Now, at the moment, banks have regulation coming at them from all corners, basically, and I know you've been very involved in the regulatory debate. How do you feel it's going? Do you feel that the regulators are starting to get the messages for what's practical now and there's a sort of reasonable dialogue going on, or are there bits of the regulations that are coming in that you're still concerned about?
I think it's a mixed picture. I think we've seen some very good steps forward, some considerable achievements, and I actually think the core of the Basel III announcement in terms of getting a consistent view and a coordinated timetable around the core regulatory capital regulations is a big achievement and shouldn't be underestimated. But there's still a lot to be worked out. What we're going to do around G-SIFIs, as they're now called, counter-cyclical buffers. There's still quite a lot to be done in the liquidity arena around resolution and recovery, bail-in. So there's still a lot. I think the important thing, two important things. One is that we focus on the really critical changes rather than trying to do everything at once. And second, we keep in sight always the need to have consistency, a level playing field, because otherwise we end up with all sorts of problems around regulatory arbitrage.
Okay, now obviously if you win the top award, it means the bank's doing something right. But will you carry on with the strategy just the same as it was in 2011, or are there things that you're going to do differently, or are there new areas that you're looking at? Perhaps you can give us a bit of a flavour for 2011, but probably not giving away too many secrets.
Well, in a way we're quite boring. We look at our own strategy and say, well, it's working. It has worked well. Why change it? We're focused on Asia, Africa, and the Middle East, which are pretty good parts of the world to be focused on. We run a very conservative business model in terms of the shape of our balance sheet. We're focused on our relationships with clients and customers. We're not a transaction or product-focused bank. We're very, very disciplined and focused on the real basics of banking, how you manage liquidity, capital risks, costs, and so on. That strategy, that business model has proved pretty robust. We don't see any reason to change it.